So in this video, I'm going to introduce the PD array matrix, which stands for Premium Discount Array. And I'm going to give a little bit of explanation into it and what it is before we actually get into the actual PD arrays in subsequent videos. So this is ICT's concepts, of course, and what the PD array matrix is basically how price moves from one PD array to another. Price may move from a premium PD array to a discount PD array, and then to another premium array to a discount array, and it's doing this transcending multiple time frames all at once, right? As we know, price is fractal, and this has to be considered when utilizing the PD array matrix. So here we have a list of PD arrays. In the lower half, we have the discount, and in the upper half, we have premium. So in descending order, we have, once we get into a discount area, we have a bullish mitigation block, bullish breaker, then liquidity void and fair value gaps. And then we have bullish order block, rejection block, and all low or high. And as we get into a premium area, as in the upper portion of a range, we start to get into the bearish mitigation block, which would usually come first. Bearish breaker, then you get your liquidity void and fair value gaps, and then your bearish order block, rejection block, and then finally your all high or low. So once price breaks out of this range, generally it's in a higher time frame PD array matrix. Obviously, price cannot just be bouncing back and forth, up and down forever. So let's have a look at a diagram. So here we have a diagram I created about, I guess, 2 years ago, almost. Here we have the PD array matrix, as we just saw. And of course, the midpoint, or the 50% level, is equilibrium. So in this diagram, I use line charts, but of course, on the chart, we'll be actually looking at these PD arrays with candlesticks. So let's assume price action is like this from the start. And we get a retracement and we get an expansion, and then we get this order block on the weekly. Now you may not know what the PD arrays look like. That's fine. I'm just illustrating how it bounces from one to the other on multiple different time frames. So we get this expansion up, bullish market structure shift, and we create a high. Price breaks down and it retraces into a 4-hour fair value gap, otherwise known as a SIBI if it's bearish, and BISI if it is a bullish fair value gap. And then we break down and create a daily fair value gap here. And we retrace all the way to this weekly order block. Okay, now on a lower time frame within the order block, we make another low and we break that, creating a breaker block over here. We retrace into the breaker block and expand again into the daily fair value gap that was created. So this would be a premium array, as if you take the top or bottom from this range, cut it through the middle, we are above equilibrium in this instance. So we're in a premium. So from this daily fair value gap premium array, we retrace into this discount. If you take this whole range, it's roughly about equilibrium, this mitigation block over here. And then we proceed higher, breaking past this fair value gap, coming into here, some small consolidation, creating and inducing and engineering some buy side liquidity, takes out that all high by a bit, retraces, breaks down, creates a 4-hour fair value gap, retraces into that, and let's just say it's also a daily order block. So when you have multiple PD arrays nested together, it adds a higher probability for your trade panning out, or at least getting a reaction from that PD array. So in this instance, price breaks down, retraces into the 4-hour fair value gap / daily order block, bearish order block, and comes into this weekly order block that was created again. We get the same thing, let's say a breaker created for a potential long opportunity if you were using great breakers, targeting what? Let's just say targeting this all high, because let's just say you had a bullish bias on a higher time frame and you were expecting price to go higher. this would be an opportunity to go long. Price comes up above the short-term high, and then small retracement, and then breaks higher. Okay, so this is an example on this diagram. So price is bouncing from premium to discount to premium, back and forth. Knowing which one to use, of course, it's the important part, and that's something that takes experience and something we'll get into in subsequent videos relating to the price delivery continuum, using a top-down analysis and how price is fractal, and of course observing how the bodies respect PD arrays and how the wicks may go above and beyond what is expected from a PD array. Alright, so now we have an actual chart example. This is the Australian dollar against the US dollar, one-day chart on Oanda. It is quite recent, as you can see. You can use this chart yourself. You can see the date down here. And of course, you can observe the same things on whatever chart you want, because they all work, okay? Let's just say this old high was created and price traded up here. And let's just say it broke down here. And now we are, for example, anticipation that price is going to break this high and potentially move higher, at least coming to break this high, right? So we have a range here created from this high to this low. And the midpoint, we have equilibrium, okay? Around here. Above would be premium and below discount. So what happens? We create this CB, which is a bearish fair value gap. We also have this rejection block. You can call this an order block. I'm just illustrating a couple here. Price breaks down and starts to retrace. It comes back into a premium, eventually into this premium CB and breaker, nested PD arrays, and then it breaks down. Comes back into a discount of the range, and you can also use this range here from top to bottom. You see it comes back to equilibrium, all right, of both ranges. Comes into this bullish fair value gap, this BISI, and then uses that to move higher. Some traders may see this large down move as a potential continuation, but no, if you can understand how the PD array matrix works, you won't be fooled by such things. You'll know where price really wants to go. Price expands higher, comes into this rejection block, retraces, and now we can use this range here, right, from bottom to top. Where does price come to? Equilibrium. Comes back into a discount just by a little bit, pretty much on it, right, into this bullish fair value gap, BISI, which is also an order block, and also kind of, you can consider it a mitigation block. So there's multiple time frames that you can view this on. There may be something else showing up on a different time frame. So this is the importance of using multiple time frames, which we will eventually get into. Not in this video, but in subsequent videos. So we come into there, and then we take out a high, and then we eventually take out this old high, okay, which is a premium array, and then we consolidate from here. So you can see how prices is moving from premium to discount, premium to discount, premium to discount, and then eventually what happens here, you can see we come up to here, this area, and then we break down. It could be an order block, a larger order block in this area. You can see this breaker here, actually. You see it here, right up to there, which is very interesting. And then we come all the way down. So if you go to a higher time frame, you might be able to see maybe a fair value gap in here, a larger one, more relevant to a view of only like a few candles. When you start to consider PD arrays with this much candles and structure forming, you may not be as precise, and you'll obviously have to wait for more confirmation and break of structure on, the chart that you're looking at. You see a BISI here, and you may be thinking, why did I not hold? I wanted to take a long. I put my fib. It's at a discount. It didn't even budge a bit, and I just got stopped out. That relates to the time frame that you're looking at. Okay, so this is the daily. If I go to the weekly, there may be something. Like I said, look, there is a CB here. If we go down to the daily, it's not so obvious, but we do see a breaker of sorts, and price uses that. So, being able to look at all these different time frames and understanding understand the order flow that way. You know, that's gonna be crucial to taking these high probability entries and an analysis with a high degree of accuracy. So I hope you found that video insightful, and I look forward to going through each individual PD array in subsequent videos.